What's up, guys? Welcome for today's live trading. Not only are we doing live trading today, we are also going to do a small introduction to Forex. Um, it's not small, but just the basics of what is Forex, what do we do in Forex. Yes, and I welcome comments in the comment section. And for our students who are live in our channel, you can comment also. Yeah, welcome. Yesterday we had a trade. It was GJ, GU, GBP USD. Where is it? This one. This is the only trade we took yesterday. Live trade. It was a good trade actually. So if we go back and see, our target was 50 pips, 1.367, which was surpassed. Even price went above 1.37. However, we took only 30 pips. This is because of risk management. And as we all know, we don't know how far the market is going to go, or it might even decide to reverse and take back our profits. Therefore, that's the reason why I took 30 pips. That is my target on a daily basis. If I achieve my weekly target on today, tomorrow most of the time I'll have runners. Yeah, so what we're looking at today is GBP pairs. We only measure in 3 pairs: GBP, USD, GBP JPY, and Euro JPY. Basically, in Forex, this is one of the tools of it's a risk management tool. You don't have to look at all the pairs. There are so many pairs. I think of over 50 pairs. So it's good to focus on one or two or three. In that way, you're able to understand it. In that way, you're able to even to make good predictions. A good analogy is that if you have one girlfriend, it is easy to deal with her than having 6 other girlfriends. The cost is low, and also you're able to make her happy. Therefore, that's just an analogy. I know we are polygamous, so you can decide to do whatever you want. So for today, we are doing Forex introduction. Basically, what is Forex? So I'll begin with okay. In the meantime, this is the first trade we have. The reason is that let me go to higher time frames. This is the Tuesday reversal. In our course, we teach Tuesday reversal, the weekly market structure. So this is the Tuesday reversal. We experienced this is the Asian range. This is the break, London session breakout, and then this is the New York reversal. That's why we had a lot of confidence taking this trade. Therefore, generally, we can say price is on a bullish momentum. Let's take a look at the daily chart. This one, since November, price is on a bullish momentum. As much as it is consolidating, but it is still making higher highs. I'm saying bullish momentum because it is making higher highs. Like today, it has made a new high. Let's go to this is the new high. This was yesterday's high. This is our new high. So basically, that tells you we're experiencing a bullish market. And if you look closely, you'll see that there was a resistance that was here. This is a resistance. Price was being rejected at that particular area. That was 142, and 42 is an institutional level. So it makes sense for price to be rejected at that area. And then it was broken yesterday, and it has been retested today. It's not. It is around 142. It has not been retested, but the same zone has been. It was rejected again. My entry is around 142. Let me give the exact entry. My entry is at 142.483. I adjusted my stop loss from 10 pips to 20 pips because I believe price is going to push up. And this is our first target. So 142.483, where the price is right now. Um, our first target is around 20 pips. However, if price breaks this high, it's going to make another high, another high, another high like that. So as we are patient with this trade, look at this rejection. This shows nice rejection. Yes, price went back. At one point, this was one big bearish candle, but it made this rejection. It was rejected at almost the low of the Asian session, low of the day, that is. It is not exactly the low of the day, but it is the low of the Asian session. So as we look into it, let's go to now introduction to Forex. What is Forex? Forex basically is foreign exchange. It stands for foreign exchange market. So Forex, so foreign and then exchange. For is coming from foreign and then exchange. X is coming from exchange. This is the largest financial industry as for now. It has not been surpassed in the world globally because the main reason is that it involves the exchange of one currency to another. The moment the world was made a village market, they should say it's a village market. Um, right now, you can transact from you can buy an item from China and yet you're in Kenya. So the exchange of Kenya shilling to Chinese yuan is the one that is called the exchange. You're exchanging Kenya shilling to Chinese yuan. For you cannot exchange okay, there's a base currency that is the US dollar. Right now, for you to maybe purchase a car, you have to convert your money into US dollar because even those guys in Japan have based their prices in US dollar, and yet they're in Japan. They're not basing their price of the car in Japan. That's why the foreign exchange market is this big. So each currency is paid against another, and traders speculate which country will have a stronger economy over a period of time. This explains why the US dollar is base currency because US dollar is the best currency because US economy is the superpower, meaning that globally speaking, US has the biggest economy in one or another in terms of economy, in terms of infrastructure. Basically, right now, Chinese are the one competing with US. But the problem with Chinese is that they heavily manipulate their currency. That's a problem. That's the reason why Chinese yuan cannot replace US dollar. And the other reason is that US economy has heavily borrowed from other currencies. So in one way or another, we have participated in foreign exchange market. Um, When somebody comes from abroad, you go to a forex bureau or a bank, you exchange your USD to Kenya shilling, or from Canada to USD, something like that. Or maybe when you want to travel to South Africa, most of the time you exchange your Kenya shilling to US dollar. Ukifika South Africa, you exchange your US dollar to South Africa rand. So you see, each country has their own currency. Zimbabwe have their own dollar. South Sudan have their own dollar. We have our own shilling. So basically, that is it. If you have traveled in one country to another, you'll have to exchange in. That is now the traditional forex trade. It is a traditional forex trade right now. Because of technology, we have moved to online trading, whereby you don't basically have to own a currency. You just have to trade it online. This explains why I think, as per last year, the foreign exchange market was valued at around 6 trillion, and it is apparently that even central banks, they are able to trade now the forex industry, because you have to keep your currency stable to attract business. The same way, you have sometimes you find a country will decide to manipulate their currency so that they have to encourage the exports of their commodities. Or sometimes they have to undervalue, like Chinese are undervaluing their currency so that they have to do a lot of exports. So the person who is involved in now carrying exchanging from one currency to another is called a trader. So basically, a trader is a person who trades one commodity to another, and traders are given the opportunity to leverage substantial amounts of money with a minimum investment. Um, there are a few things that I'm going to mention as we go on. It's called something that is called leverage in online trading. Leverage is that you can have $50, but you'll manage to trade. Um, the broker is the one facilitating for that. Um, the leverage part is quite sensitive. Some countries have regulated the leverage to only 1 to 40. So that means if you have $50, um, your account is multiplied by 40 so that you can be able to trade. Because for you to trade, it requires, in the traditional way, it requires you to have a lot of money so that you can make some profits out of the price fluctuations. So sometimes the leverage can work against you. Even during I think it was 2012 crash, where the Swiss bank mentioned something to do with interest. So a lot of guys went out of market. So there's something to note, is that before you decide to do forex trading or even invest, you should carefully consider your objectives, level of experience, and risk capital. That's the reason why we are doing forex training. It is free because these materials are available free online. But for us, we are doing free training and mentorship. However, because we have come up with a particular way of trading, which has proven to be successful in the last few years, we are charging a fee. So there's a possibility, if you are experienced or even not experienced, you're going to sustain a loss for your initial investment. For me, I've blown several accounts. I don't have a number, but I'll try to count. I think it's more than 10 times I've blown my account. My initial deposit was $10. I blew it. I did, I think, around $100. I blew it. I've blown so many accounts, but it's because of this that I've gained experience. I've gained track record. Like now, I'm doing a $10,000 challenge. Hopefully, I'll be able to attain it. Right now, I've been able to do 102%. I'll share the link below for my Facebook. You can track my record. So basically, you can lose money in forex. It is not entirely a get rich quick scheme. It, you can lose everything. I think a lot of people have lost money. Um, a lot. Let me say a lot. Let me say a lot. So you should be aware of the risk associated with the trading, and it is recommended that you seek advice from independent financial advisor in case you have any doubts. Independent advisor does not mean it's our company. We are a financial advisor, but you can reach out to other guys. There are so many guys who are doing advising. Like I have, for me, I have a mentor. They're called AstroFX. There's Raja Banks. I've learned a lot from him, and then I've learned a lot from there's a group called Forexia. So you seek guidance, and that is what we are doing here, because the information that is out there is so scattered. It is too much. So that's the reason why we are doing the training in the academy. So the bigger question is that why would you want to trade forex and yet you know you can lose money? There's so many advantages. One of the advantages is that you decide the risk, and no one can corner the market in this way. That um, let me give a good example. Right now, let's assume you are doing you're selling what? You are importing things from China for resale. You're doing a retail business. That means the government can come in anytime. The government can create regulations, and you'll be out of business. Like recently, we experienced coronavirus. The guys who are importing things, they experienced a challenge. Some were put out of business, some were not. So, for us who are trading, we are still in business. Even when there was a lockdown, I was still in business. Yes, there was a lot of panic because the market does not love uncertainty. The market loves when there's calmness. So even it was very difficult to make money, but we persevered, and we changed how we traded. That is psychologically, not the trading edge. So that is one of the advantages. You're the one who decide the risk, and no one can corner you. No one can corner the market. And then small deposits that you use to trade can control a large amount of capital. So you'll find you have $50, but as I said earlier, there's something that is called leverage. The broker will provide a leverage of 40 times of your deposit. So you have a bigger purchasing power. Let me use the word bigger purchasing power. So there's minimum commission fees and transaction costs for other trading styles. I've done stocks, and there's a lot of cost involved in trading stocks. There's things like tickers. There are things like tickers. You have to pay your broker a certain commission. Therefore, for forex trading, so far the the charges that you are going to experience are usually the commissions. The commissions are now there's another charge that you're going to be charged. It is called a swap fee. That is those are the costs, but they are very minimum. They're usually between sometimes they are $5, even 0 point something dollars, depending on your lot size. So basically, those are the fees. Maybe if you want to do a deposit, there's going to be a transaction fee that is for Kenyan guys. Maybe the bank is going to charge you, or M-Pesa is going to charge you. So there's many participants. So you don't end up being stuck in a position. Most of the time, you'll actually, since it's a global thing, it is a global market. There are so many participants. I don't know how many we are in the world right now, but you can assume. Actually, there was a research that said during coronavirus, um, the people who have started who did trading increased. Maybe I don't know if I can pull that research. It was from I think Washington Post. So there's so many participants. Market is not going to be stuck in a particular range for a long time of a long period of time. It is going to be stuck maybe in a week, maybe in a month, but it cannot do so in a very long period of time. And then the other thing is that there's no entry barrier to get started. And then the advantage that there's usually a free practice account that is called a demo account. So for you to open an account with a broker, you only need your proof of residence and I think proof of ID. Proof of ID is your national ID, and then proof of residence is something like KRA. So there's very little entry barrier, and then you can trade anywhere. As much as people say you can trade using your phone, I don't recommend the same because you have to analyze just like any other job. You cannot just use your phone to make business. So the other thing, you choose when to trade. There are three sessions. The market is 24 hours for 5 days. So we have London session that is for the European countries. We have New York session that is for the US economy. We have the Asian session. Asian session includes a Hong Kong session and Sydney session. So basically, you can decide to sleep in the morning and trade at night. You can decide to trade, trade in the morning and sleep at night as usual. For me, I've decided to use Kenyan time. I wake up in the morning. The advantage is that the Kenyan time you can access both London and New York sessions. So So there's something to note here that with the technology that we're having, it has given you power to trade using your iPhone, your Android phones, your laptop, tablets. So you can just start trading in the next 5 minutes, but that does not guarantee you that you're going to make money in the next 5 minutes. That's why you need guidance. That's why you need a lot of training and a lot of psychology training, that is mindset. There's a lot of things that involved. And then the other things that it doesn't care about your ethnicity, gender, occupation. There are so many barriers these days. If you want to get a job, lazima ukuwe na connection. So here in Forex, you don't need a connection. You only need yourself. And I can say somebody to guide you. Therefore, let's have a look at this trade. Here it is. This is how it looks in 1 hour. Let's look at 15 minutes. This is how it looks in 15 minutes. It has broken the high of Asian session. And then let's look at how it looks. Somebody is saying the screen is black. Let's see what is happening. not black anymore. It's only my UPS making some beeps. Let me switch it off. Mine, not black. It's not anymore. Black. You want to be black? It's only my UPS making some beeps. Let me switch it off. Mine, not black. Hey, Martin. Martin, can you talk? Let's see how this trade is performing. So far, so good. So far, so good. So far, so good. It is at 142.5. This is an institutional level, 142.5. It is a whole number. It's not a whole number, it's a half number. It's a half number for the whole number. Your mic has a problem. Martin, use your earphones. So basically that is Martin, I cannot hear you, but I'm seeing some signal from your end. So price is at 142.5. Now I'm going to cover something physics. The document will be available in the link below. Let me first update the small challenge I'm doing. So now that we have understood what is forex, I wish we had an exam so that we do a cut. Hey guys, I'm back. So we're talking about the currency pairs. There are four types of currency pairs. There's major pairs, there's minor pairs, there's the cross pairs, and then there's now the exotic pairs. The major pairs include the major global currencies. That is the US dollar, the Swiss franc, the euro, the euro, and then there's the Aus dollar, New Zealand dollar, Japanese yen. Euro is for the eurozone. It's not limited. And then there's the the pound, the Great British Pound. So for the major pairs, we are talking about US dollar against Canadian dollar, US dollar against Swiss franc, Great Britain pound crossed against the US dollar, Australian dollar crossed against US dollar, US dollar crossed against Japanese yen. That is the structure. It is not Japanese yen crossed against US dollar. It is the US dollar which is the base currency. Then Japanese yen is the now the core currency. So let's see how this trade is performing. Oh wow. Doing good. We are at 0.6. That's nice. That's nice. So already we have secured 10 pips. Already we have secured 10 pips. So if price moves up to 142.7, I'll move my stop loss at break even, like yesterday. That is a risk management tool. My analysis is that price is going to break up to 144. So I might decide to hold my trade today until Friday. Yes, let's move ahead. That is for the major currency. Then you for the major currency pairs, the euro is crossed against Great Britain pound, crossed against Swiss franc, crossed against Australian dollar, and the likes. For these yens, most of the time, usually the port currency. Most of the time, euro is the base currency. Most of the time, GBP base currency. Actually, the only time it's a port currency it's when you're doing euro GBP. That is the only time it is across. It is a base. It's a port currency. So that is the different pairs. So I don't know what is happening. The screen went black. But so that is the definition of a pip. And then we have lot size. Lot size are they're called like currency blocks or units. One standard lot is equals to 100,000 units of currency. Now that's where the leverage comes in. But there's um, so one standard lot in currency. So if you are in a trade and you have bought one standard lot, you have bought 100,000 units of particular currency. So one standard lot in trading is 1.0. There is one mini lot. One mini lot is 0.1. There is micro lot is 0.01. So one micro lot is 1,000 worth of a currency. Two, there's mini lot. Mini lot is 10,000 worth of a currency, and then standard lot is $100,000. Actually, dollars. It is in terms of dollars. So that explains why certain countries have controlled leverage. Let's see how this trade is performing. Price is above the high of Asian session. Price is above the moving averages. So what is left to be tested is the high of London session. Currently we are in London session. So I'm expecting price to do this. I'm expecting price to do this. Price to break the high of today, which is here. Let me do this. So this is the high of the day. So I'm expecting price to break this high of, because this resistance was broken earlier by this one big candle. And for those in Nakuru, tomorrow we are having a boot camp at DND 6th floor. It is near Laken. So come pass by. We talk about Forex. Get to know us. We are starting a trading floor there as of 1st February. Yes. So let's talk about something that is called a bid. The bid is the price at which your broker is willing to buy the currency in exchange for the quote currency. The bid is the price you can sell. Now, this example, in this trade, this is this is GBP, this is GBP USD. In this case, GBP is the base currency, and then USD is the quote currency. What this means, in our case, we bought, our trade is here. It's a buy trade, right? What this means is that we have bought 142. We have bought the price of pound when it is at 142.48. Now, as we're speaking right now, when you go to the Forex Bureau, one Great Britain pound is equal to $142. That is what it means. So, in this case, and mute a few students who are on board. So, sorry, this is not USD. This is our trade is for the year, not. Let me correct that. Why? So what this means is that one Great Britain pound is equals to 142 units of Japanese yen. If we look at one of now GBP USD, right now it is at 1.37. That means one Great Britain pound is equals to $1.37. Let's have a look at let's have a look at Kenya, our Kenyan economy. USD, yes. So right now as you're speaking, oh look at this. You cannot read this one. What this means is that one US dollar is equals to 110 Kenyan shillings. Let's see how it has performed. At the time it hit, it made this spike. Don't know what happened during that time. The other time it was even at 100, and there's even a time even it was at around 90 something. Yes. At that time I think I was doing some analysis. So the time the dollar was at 99. So the time it was, that is 2015. Don't know what will happen to it when the BI goes through. The time it was at 83. Let's see. Let's do this. In 1998 it was at 58. In 2007 it was at 61. So it has not been performing well. See, 1998 it came up, it came down, it came up. Right now it is at its highest. at 110. Not its highest, but let's see, the highest it has ever been, it is 111. That's why if you are a person who's doing import and export, you'll hear that people saying that it is expensive now to buy things because the dollar is very strong currently. So that is the price. You can the base currency at, you can buy the currency at. Now there's the best price at which you buy the market. Oh, sorry, the bid is for the sell, the ask is for the buy. This is what is being indicated right now is the bid price. This one, this one that is being indicated by this one. I don't know if you can see if you can. I think this function is only available in MT4, whereby you can be able to involve the bid price. Yeah, now this is the bid and the ask. You can add the ask price, but sometimes it is. Now here you're getting the bid price is at 142.55, and then here you're going to get the ask price is at 142.557. So there's a difference of 6. Now that is what we call the spread. I think that is the next thing we're covering. So when you are buying at 142.547. When you're selling at 142.55. So if you're selling, you're only going to be in profits if price goes below 142.547, because the broker has to cover their spread first, their brokerage fees, 6 microbes. So so let's talk about leverage. Leverage is the ratio of traders' funds to the size of the broker credit. Remember, you're going to fund your account, let's assume with $10 or $50, whatever the amount. And then if the broker does a leverage of 1,000 or 100 or even 10, so if your equity is 1,000, your trade size is going to be equal to 10,000. Now that is the leverage to allow you to trade, because so there's something else that is called the margin. The margin is a deposit that you're going to make to open and to maintain your position. So let's assume you have a $10,000 account. Um, the margin you're supposed to use is usually set by the broker. The broker is the one doing the calculations. So you find that you have a $10,000. If you want to put a lot size of 10 or even 100, your account is not going to be, the trade is not going to be activated. Reason not made the margin, or if even after the leverage, you have not met the requirements for you to trade. That your leverage is small. So something that is also called a swap. A swap is a overnight or rollover interest and or paid for holding a position. So this is the amount that you're going to pay your broker. I think most brokers are using that. So it can be $2 if you are using a higher lot size. So the higher the lot size, the higher the swap. But if you trade the trader entered in and I close it before the end of today, before midnight, I'm not going to be charged any swap fees. The only thing the broker is going to charge me is this, the spread, which is already covered when I entered my trade. I'd repeat with specific hours. We have four trade sessions. We have London, we have New York, we have Tokyo, and we have Sydney. Um, this is the normal working hours for them. So as we speak right now, we are in London only. It is going to close in the next 6 hours. If you look at the time for the time that is the London time now, let me check. Time M. That explains why right now we are open, because the banks are open. And it also explains why the New York session is closed, because right now it is 5 a.m. According to this, the New York session is going to open in the next 3 hours. So they report to work at a.m. So the market does not just open and closes randomly. It has to, because remember, forex market is powered by the global economy. So if a country is experiencing pursuit, let's assume a holiday, the movement is, because guys are not going to report to work. The banks, the central banks, because those are the biggest players in the market, they're not going to report into work. You'll experience low liquidity, volatility. It will be, because it will be us, them are closed for holidays. Therefore, it's good to note the fundamentals. What we usually teach from our side is that you become aware of the fundamentals, but you don't use the fundamentals to make your decisions. There's only thing and only thing. It is not the candlestick, but it is the price. This candlestick represents a price. So if you follow the price, if you if you if you manage to interpret what the price is indicating, because at the end of the day they usually create patterns. These are the patterns that we use to manipulate so that we can get our entries. Now that's it. That's introduction to Forex basics. If you want more, you can visit us at DND, DND 6th floor near on the Ken. We have a lecturer. We have real-time traders. They trade every day. You'll find below one of the accounts of one of the traders. Let me share it now. Okay, I'll share it the moment the video is done. So let's see how a trade is doing. Currently, price has broken. Price has broken the high Asian session. Price is above the high Asian session. This is the next high, the high of today. We have a buy at 142.48, so already we are in profit, but this is not enough. Our expectation is that price is going to pump up to break up to 142.7, which will be around 30 pips. So it is a waiting game. So let's wait and see. For students, you can ask questions. This is how those look today. Let's go to fundamentals. This is how they look as of today. Let me share the screen. This is how they look. So we're expecting USD news at 6:30. So most of the time when you are in a USD trade, it is recommended you manage the trade, because most of the time it is the time that we experience a lot of manipulation. And then I think those are the major news that are happening today. Let's see if there's another one. Yeah, we have a um, Federal Open Market Committee. This is one of the. It is the committee that determines the interest rate. So already they have sat. So it's just going to be a conference. At this time, we experience a lot of liquidity. So plus there's going to be interest rate decision. Currently, it is at 0.25%. It is consensus means the people who do research, the economists, are expecting that the interest rate will remain at 0.25%. Here is a brief description of the interest rate. The National Central Bank has an economic policy meeting in which the board members took different measures. The most relevant one being the interest rate that it will charge on loans and advances to commercial banks. In the US, the Board of Governors of the Federal Reserve meets at interval of 5 to 8 weeks, in which they announce their latest decisions. A rate hike tends to boost the local currency, as I was speaking earlier, as it is understood as a sign of healthy inflation. A rate cut, on the other hand, is seen as a sign of economic and inflationary woes, and therefore tends to weaken the local currency. If rates remain unchanged, attention turns to the tone of the committee statement and whether the tone is hawkish or dovish over developments of inflation. Hawkish means um, um, it means positive. It means bullish. Dovish, it means weak. It means bearish. So just like a hawk, a hawk is something that is hungry. It's a predator. Dovish, it comes from the word dove. So a dove. For those who know how to pronounce, it's a calm. It's calm. So when the statement comes as hawkish, US dollar is going to be strong. If the statement comes Therefore, if the statement comes as dovish, USD is going to be weak. So that means the pound is going to be strong. USD is going to be weak. If the statement comes as hawkish, that means we're going to experience a USD strength, a sudden USD. Let me use the word sudden USD strength. Now this is the dollar index. This is the one that tracks the performance of the dollar. As you see, for the better part of today, it has been uptrending. So this could mean that maybe it's going to turn out dovish, having in mind they have a new president. Trump went home, and the funny thing is that Trump went home and markets didn't crash. So that is one of the most weird experiences I've had this year. Therefore, it's good to take note of the fundamentals. They are quite important. Now let's go back to our chart. Our trade is performing. So far so good. Still in profit. Still in. Today we're going to have a short live session. This is our current trade. I'm going to update it in our Facebook, and for those in Academy, I'm going to post it in our group. This is the performance of the trade. Right now it is at 142.53. Clear view is done. Our entry is at 142.483. Price is at 42.53. I'm expecting it breaks 142.64. Our first target is at 143. That is 50 pips. Therefore, I'm going to close this live trade and head to a few meetings. I'll update you guys on the performance of the trade. See ya. Peace.